Nepal is right on the edge of a massive economic transformation. The plan? To export billions of dollars in clean energy. But there's a huge problem, a $3 billion bottleneck that could stop the whole thing dead in its tracks. So let's break down exactly what's going on.
You know, this single sentence really captures the entire story. On one side, you have this incredible boom in hydropower generation, more power than ever before. But on the other side, you've got a grid that just wasn't built to handle it. It's a classic case of a huge ambition running smack into a very hard, very real physical wall.
At the very heart of this problem is what we can call Nepal's energy paradox. The country is getting really good at making a super valuable product, but it's hitting a crisis point in actually getting that product to the market.
So here's the paradox in a nutshell. The private sector has been building power plants like crazy, and they're doing a fantastic job. But the state, which is responsible for building the transmission grid, the actual highways for all that electricity, has fallen dangerously behind. We're talking persistent funding gaps and just endless delays. This isn't just some small hiccup, it's a fundamental mismatch that puts the whole energy sector at risk. And this mismatch? Well, it has a very real cost. It's measured in something called spilled energy. And this is where that potential economic boom starts to look more like a massive economic drain.
Now, spilled energy might sound kinda harmless, but it represents a brutal economic reality. Just picture it. The monsoon rivers are raging, the turbines are ready to spin, but the grid operator, the Nepal Electricity Authority, or NEA, has to get on the phone and tell these brand new power plants, hey, you've got to shut it down. We literally have nowhere to send the power. Every time that happens, potential money just vanishes.
And listen, we are not talking about small numbers here. The figures are absolutely staggering. For every 1,000 megawatts of surplus power that can't get exported, a pretty conservative estimate puts the loss at over $1.2 million every single day. As that surplus gets bigger, the annual losses could easily top $500 million.
And this chart really shows you the sheer scale of what we're up against. See that first bar? That's Nepal's domestic demand in the wet season, about 2,000 megawatts. Now look at the second bar. By 2026, the country is projected to have a capacity of 5,000 megawatts, or even more. That huge gap between what Nepal needs and what it can produce, that's the surplus. And without a grid to export it, all of that becomes wasted, spilled energy.
But here's where the problem gets even more dangerous for the country. You see, most of these private power producers have what are called take-or-pay contracts with the state. This means the government, through the NEE, is legally required to pay for the electricity these companies produce, whether it can sell it or not. So when energy gets spilled, it's not just lost revenue. It becomes a massive, ticking liability on the government's balance sheet, a true fiscal time bomb.
Okay, so why can't the power just get out? A lot of people might point to the big cross-border line to India, but the real problem, the true bottleneck, is actually inside Nepal itself. The grid is missing its backbone.
Let me give you an analogy that makes this crystal clear. Think of that new cross-border line to India as a huge brand new seaport. It's fantastic for shipping things out. But a seaport is totally useless if you don't have a national highway system to get all the goods to the port in the first place. Nepal's internal 400 kilovolt grid, well, that's supposed to be the highway system, and right now it's dangerously incomplete. So the power has to follow a path. It's collected from the rivers in the east, then it has to be wheeled all the way across the country and pass through a critical central link. This central link includes a segment funded by the U.S. Millennium Challenge Corporation, the MCC, which has faced major delays. From there, it's delivered to the export hub in the west. It's a chain, and if any one of these links fails, especially that central connection, the whole thing just breaks down. Now, the solution is going to take about $3 billion of investment, but this isn't a story about a lack of money. I mean, the world is swimming in capital. No, this is a story about a failure to attract the right kind of capital. So that begs the question, right? Why is this specific $3 billion funding gap so incredibly hard to fill? The answer really lies in the unique nature of this kind of infrastructure and the very specific type of investor it needs.
Building a grid requires something called patient capital. Now, this isn't money from some venture capitalist looking for a quick, high-risk payoff. Now, this is money from pension funds and sovereign wealth funds. They want to invest for the long haul, like 25 or 30 years, and get a stable, predictable, low-risk return. For them, safety is everything. And right now, for those super conservative investors, Nepal's policy environment just looks too risky. They worry about the government's ability to pay them back over 30 years. They worry that a regulator might just change the rules and tariffs halfway through the contract. And they worry about currency fluctuations eating away at their returns. Without absolutely rock-solid, bankable agreements to manage these risks, that patient capital is just going to stay on the sidelines.
So all of this brings Nepal to a really critical crossroads. The choices that are made in the next year or two are going to decide which of two very, very different futures the country will have. On one path, you've got the muddle-through scenario. Basically, business as usual. Delays continue, hundreds of millions of dollars are lost every year to spillage, and the government's finances are put under incredible strain. But then there's the other path, the coordinated push. In this future, the government makes the transmission grid a super priority. It cuts the red tape, it creates policies that attract that patient capital, and it actually achieves its export dream. The contrast couldn't be more stark.
This quote from an expert just perfectly sums up the sheer absurdity of the situation. Nepal is building these incredible, state-of-the-art economic engines, but it's bolting them onto the chassis of a bullock cart. You've got modern hydropower plants being connected to a grid that is decades out of date. And the hard truth is, neither physics nor international finance is going to wait for bureaucracy to catch up.
And that leaves us with the final and most crucial question. At this point, this isn't really a technical problem anymore. It's a test of policy and of political will. That $3 billion bottleneck? It's a choice, not an inevitability. And whether Nepal can make the right choice will determine if its roaring rivers lead to a flood of new prosperity or just a cascade of completely preventable losses.